At some point over the last few years, investing stopped feeling like analysis and started feeling like a game of Wheel of Fortune. Someone turns a weekly options trade into 2,000% and posts it like they just unlocked capitalism, or worse, like they're about to sell a course. But while that's fun to watch, it's also unsettling, because markets used to be anchored to something real. Earnings, cash flow, economic data. And sure, markets had bubbles, but eventually fundamentals showed up like gravity. You could ignore them, mock them, meme them, but not forever. Now, prices and fundamentals feel like a situationship. They're connected, but nobody wants to define it. Since 2020, the story changed. Buy the dip, stocks only go up. And that should make you uncomfortable. Not because it hasn't been working, but because it has. This wasn't random. Low interest rates, new investors, and money flooding the system. Now every dip feels like a discount. Every crash feels like a sale. And here's the part nobody likes to admit. This didn't just affect beginners. It affected professionals too. Because when markets change, experience stops being an advantage and starts becoming a liability. Take Michael Burry, the guy who made $800 million betting against the housing market. Even he said his view of value is no longer in sync with the market. In other words, he's playing chess and the market is playing Mario Kart. So if fundamentals aren't driving prices anymore, what is? Behavioral finance. Markets aren't just numbers. They're human, driven by greed, fear, and herd mentality. Or, in 2026 terms, just vibes. Humans don't evaluate risk logically. We follow stories. We follow crowds. We react emotionally. And after 2020, something changed. The question became, not what is this worth, but will people buy it? Because when narratives matter more than numbers, momentum beats valuation. And then social media made everything faster. Now ideas don't spread in months. They spread in hours, sometimes before the facts even show up. And when enough people believe the same story, prices move. Even institutions had to adapt. Now they track sentiment, narratives, and attention. So now we're left with one question. Is this temporary or permanent? Maybe it's just another bubble and fundamentals will come back. Or maybe this is a new system where markets don't just price value, they price attention. So tell me, are we in a bubble or a new era? Drop your take below. And if this made you question everything, good. You're right on time for 2026.